If you ask the internet for investing tips, you usually get the advice to buy a single ETF and call it a day. But do you really make the most of your money when following this generic advice? And if so, would you be better off by putting this ETF into a broker or into one of the German pension schemes? Which one is actually better, giving all the criteria that matter to you? Flexibility, tax benefits, highest return? Let's find out together in this PerFinEx investing video. If you know our content already, you know that there is no right or wrong answer. There's always positives and negatives to each and every option. It always depends. So let's look at 3 benefits of putting your ETFs in a broker versus putting your ETFs in a pension scheme. The first benefit of a broker, which I feel is one of the biggest reasons why ETFs have become so popular over the last years, it's just super easy. We talked about this in our German broker battle already when comparing Scalable Capital with Trade Republic, that there's not much of a difference between German brokers. Which means there's also very little that you can do wrong. You just download one of these apps, transfer some money to your account and buy whichever ETF you want. Except the ETFs that you seem to want all the time. The SPY or the VTI that is only regulated in the US. All ETFs with just a ticker symbol and no WKN or ISIN are not regulated here in the EU, so we are not supposed to invest in them. I know there are ways to circumvent the system, which is what some of you do, but you get yourself tangled up in an insane tax nightmare. I talked about this with tax advisor Dirk in our video that you can watch right here. So the ETFs that you can invest in are almost unlimited. With the pension, it depends on the exact pension scheme. There's really good pensions out there that allow you to invest in many different ETFs. There's also some pension schemes out there with almost no ETFs to choose from. So before you go one way or the other, you probably want to see the options that you have before making your decision. And if we can help you with that, you can book a free meeting with us right here. Aside from the full flexibility in ETF selection, which can be positive or negative, depending on the exact ETFs that you choose, you also have full flexibility over the withdrawal from your broker. And I know this sounds nice, and we list this as a positive here, but it can also be too much freedom for you to handle. Let's say you're 30 years old now and invest 250 euros a month over the next 37 years until you retire. Pretty long time, huh? With the historic rate of return of the stock market of 7% per year, you would accumulate a nice nest egg of almost €500,000, taxes and all kinds of costs ignored here. We'll come to that later on. Now, you're about to retire with €500,000 in your pocket. How much pension can you pay yourself every month? If you think your life expectancy is 10 years only, you can pay yourself over €4,400 a month. €2,300 over 20 years, and €1,600 if you want your money to last over 30 years. And keep in mind that all these numbers are without any taxes and any costs. This is an extremely optimistic scenario. And that's where the pension shines. Because if you decide to withdraw a monthly pension instead of a lump sum payout, you will receive that pension until the very end. Even if you theoretically run out of money, the pension company has to continue paying your pension until you pass away. Flexibility may be lower, I'll give you that, but safety is a lot higher with a pension. And the second reason why I think ETF investing has become increasingly popular over the last years is that basically anyone can create some passive income streams for themselves. You just invest in a distributing ETF that pays out dividends or interest, and ta-da! You have some passive income, which is what everybody wants on the internet, right? Passive income without doing anything. And it's nice, don't get me wrong. I have a €900 monthly savings plan that is just fed by the dividends that I receive from my portfolio. It's nice, but it's not tax efficient. So if you want to take away just one thing from this video, then that a pension is just a different word for tax shield. And the broker is not tax efficient at all, because every dividend, every sale with a profit, if you rebalance, for example, everything is taxed with 25% capital gains tax above the €1,000 tax-free capital gains threshold. With other investments, like real estate, you can hide very well that you make a profit because of all the tax-deductible costs that you have. So even though you make a real-world profit with your investment property, you can make a taxable loss and therefore get even more tax benefits. Your return, taxes you have to pay, but since there are no tax-deductible costs when investing in ETFs, everything is taxed with 25% capital gains taxes. And now we come to your guys' favorite topic, that you have to pay taxes without even making a profit when investing in ETFs. It's called Vorabpauschale in German. European governments were tired of waiting decades for their taxes when we invest in accumulating ETFs. That's why they introduced this preliminary investment tax back in 2018. And since 2022, we all have to pay it, whether we like it or not. Calculating this tax is extremely difficult, but if you're up for the challenge, you can watch our video about the Vorabpauschale. The only way to get around the Vorabpauschale, except committing tax fraud, which is punishable by law with up to 10 years in prison, is to put your ETFs inside a pension. Because everything that happens inside a pension is completely tax-free. You get a dividend, tax-free. You rebalance with a profit, tax-free. You sell some ETFs with a profit and withdraw from your pension, not tax-free. When you take out some money, it's taxed, but everything before is completely tax-free. And since retirement is for most of you watching decades away, we are talking about a tax-free growth of your ETFs that will make tens of thousands of euros difference. I'll show you the calculation in just a moment. On top of the tax-free growth of your ETFs, you get additional tax benefits with pensions, either while you contribute or while you withdraw. I told you a pension is basically just a tax shield. Level 1 pensions allow you to deduct your investment from your taxes, giving you immediate tax benefits. Let's say you earn 100k salary, just as an example. Then you would be taxed on that 100k. Now, if you invest 10k into your base pension level 1, you can deduct these 10k from your taxes, which reduces your taxable income to 90k and gives you €4,200 tax benefits next year when filing your tax return. And if you are smart, you take this €4,200 and invest it again. So you don't just have €10,000 savings rate, but actually €14,200 savings rate. Pensions level 3 are different. No tax benefits while investing your money, but therefore tax benefits when withdrawing your money. Lump sum payouts get a 50% tax benefit, so you don't pay 25% capital gains taxes, but only 12.5%, and monthly pensions get you even more tax benefits. Depending on the exact age you retire and your personal income tax rate, we're probably talking about an effective tax rate of 5 to 10%. So if you wanted to compare ETF investing in a broker with ETF investing in a pension, we would have to factor in everything, right? Monthly savings that you do, rate of return, costs, taxes, everything. If only there was a calculator for that. There is! What a coincidence, huh? What are the assumptions? The same €250 monthly savings rate we had earlier, with a person being 30 years old. Rate of return is the same 7% we had earlier, and we rebalance 10% of our portfolio every year. So every 10 years, we turn around our entire portfolio. With the broker, we have €0 setup fees and only €5 trading fees because we invest in 5 different ETFs. And of course, we have the ETF fees. We calculated with 0.2% TER, total expense ratio. For the pension, we calculated with a 1% fee excluding ETFs, which is usually 0.5% to 1% fee including ETFs. But I don't want to show you any pretty numbers here to paint an unrealistic picture. Let's be conservative. What's the end result? In both scenarios, you save €111,000. In the broker, you generate €346,000 capital gains, while you generate €364,000 in the pension. Who of you paid attention and can tell me why the return during the savings phase is higher in the pension, because you have no preliminary investment tax and capital gains taxes in a pension. And that alone amounts to over 36,000 euros taxes you have to pay until retirement, while it's €0 in the pension. And when you made it until retirement and take money out, you pay capital gains tax in your broker, almost 49,000 euros, while it's only 32,000 euros because of the tax benefits you get with pensions. Why is it so high and not exactly 50% of the capital gains taxes you pay in the broker? I said early on that you get a 50% benefit with pensions, if you remember. Because you paid the Vorabpauschale in your broker already over the years, you don't have to pay all the taxes when you finally withdraw. You would be a lot better off not paying 36,000 euros Vorabpauschale and paying a little more in taxes later on. But government regulation is government regulation, you know? So, bottom line, with the broker, you pay almost 100,000 in taxes and fees to get to a 358,000 euro payout, while you pay only 44,000 taxes and fees with a pension to come to 430,000 payout. Over 72,000 euros more with the pension, mainly because of tax benefits. Who would have thought that, huh? And that brings me to my personal conclusion of the broker versus pension debate. Which one is better? It depends. It depends on the time you would like to invest. If it's only a couple of years, bite in the sour apple and pay the Vorabpauschale and the 25% capital gains tax. Over just a couple of years, it's not going to be an enormous amount anyway. But if you want to invest over the decades, a pension is a much more tax-efficient way to invest in ETFs than any broker out there. So, you probably want to get both and diversify. And if we can help you with that, let us know by booking a free meeting with us right here. I wish you all a great weekend, and I'll see you in the next video.